You might have to pay a $45,000 tax to the government all at once when you sell your home. This isn't some niche thing. A lot of people have to pay it now. I know a woman, Sarah, that sold and had to pay a surprise $52,000 tax bill to the government. So you followed the American dream, bought a home, and now the IRS wants to punish you for it? If you think you'll walk away with all that home sale profit, think again. The tax man is waiting. You thought renting was a ripoff? Wait until you see the capital gains tax on your home sale. Increasingly, more and more primary residence owners have to pay this capital gains tax at sale time. Let's look at who, why, and what you've got to do ahead of time to avoid it, because once you sell, it's too late. Hi, I'm Keith Weinhold, Get Rich Education founder, Forbes Real Estate Council member, and longtime real estate investor. I don't like it, but when you own things, the government taxes you when you profit on those things during your ownership of them with the capital gains tax. Yes, that's right. They print more money, causing inflation, forcing you to invest in assets, then put a capital gains tax on those assets so that you can never escape inflation. What I'm talking about here is if you bought a home years ago for, say, $500K and sell it today for $1 million, well, the currency supply could have doubled during that time. Therefore, the home's not actually worth any more. Its value is the same. Its price is only up due to inflation. But yet, since it gained $500K in price, the government is going to tax that. And the fact that, taxation is not adjusted for inflation really stings. So how deep does Uncle Sam dig into your profit pie? Let's do the math. Of course, we've talked about the specifics on how real estate investors, those that own rental property, can completely duck out of this on that rental property with the 1031 tax-deferred exchange. All right, that's that, but what about homeowners, primary residence owners? That's what we're talking about here. Under the current law, which has been in place since 1997, on a primary residence, your first $250K of profit is sheltered from tax if you're single, and the first $500K is sheltered if you're married. This is called the primary residence capital gains tax exemption or exclusion. All right, let's use an example. Say you bought a home years ago for $400K, you're single, and you sell the home for $950K. That's a $550K gain. All right, since the first $250K of the gain is sheltered from capital gains tax, you'd have to pay capital gains tax on $300K. On all but the lowest earners, your capital gains tax is 15 to 20%. So this means if you sell this home, you'd have to pay a tax bill of between $45,000 and $60,000. For most homeowners, this is $45,000 you will have to pay at sale time, and you might not be done there. You could be subject to a net investment income tax of 3.8% on top of that. All right, well, instead in this example, if you're married, rather than paying tax on $300K, you only pay tax on $50K. So instead of a $45,000 tax hit, it would only be $7,500. I suppose a real advantage of marriage here. All right, well, just how many Americans are subject to this tax? I talked about how it's more than before. And what else can be done to ensure that you get out of paying it? Oh, first, go ahead and put a like on the video if you like how I'm breaking it down. Really appreciate the thumbs up. Subscribe if you like real estate investing and personal finance info. Well, President Trump and Representative Marjorie Taylor Greene recently suggested either completely removing this capital gains tax on your home or reforming it. Now, this would require congressional approval, but most members of Congress own their home, so they could very well be in favor of it. Greene introduced what's called the No Tax on Home Sales Act. And one reason the president and others want to cancel this tax is to get the housing market moving again and get more homes available for sale on the market. Of course, it's only a proposal. But with growing pressure to fix housing affordability, this one is gaining traction. See, these 250 and 500K of gain thresholds that are exempt from the tax, those numbers haven't moved since 1997, almost 30 years here. They haven't been adjusted for inflation, and the median home sales price has jumped about 190% in that time, from 145K back in 1997 to 435K today. So as home prices keep appreciating, more and more people will get caught up in paying this capital gains tax. As we look at this map of how much homes have appreciated just since the year 2000, with home prices on the rise this much just over the past 5 years, how many people exactly could be subject to this tax? If they sold, how many would have to pay it today? It's estimated at 29 million homeowners. 34% would exceed the single filer threshold, and 10% would exceed the married filer threshold. Another way to say this is that only about 10% of US homes have more than 500K plus of equity in them. Of course, as home prices rise, these numbers just are going to continue to go up, and it's homeowners in high-cost states that are going to be most likely impacted. New York, New Jersey, Massachusetts, California, Hawaii, places like this. So see, this tax acts as a deterrent to people selling their homes. Now, what about, say, an elderly person with a very modest income? What if they bought a home in Los Angeles for $30,000 back in 1970 and now it's worth $15 million? Well, actually, they wouldn't get caught in this net. Like I said, for those with low to mid incomes, about 47K for single or 94K for married, or less than those amounts, the capital gains tax rate is 0. But for many of you, every time your home goes up in value by 10K, that's another 10K that's subject to this 15 to 20% capital gains tax, with that erstwhile possible net investment tax on top of this. All right, well, what can you do about this growing tax obligation that you have that a lot of homeowners aren't even aware of? Well, many don't realize that you can reduce your home sales profit by adding capital improvements. That means making home renovations. So then that 40K home kitchen renovation you were thinking about doing, that might not be as costly as you think if it reduces your amount subject to capital gains tax by 40K at sale time. And no, I'm not a tax professional, consult with yours. You might be able to use a capital loss offset to avoid paying the tax. If you sold other investments at a loss, like from stocks or mutual funds, you can use those to offset your gain. Now, see, if the capital gains tax were removed for homes like what's been proposed, you understand that that would be costly to the government because it would decrease their tax revenue, of course. So, in my opinion, what I really think is going to happen, the more likely course of action would be that instead of eliminating your tax, what they'll do is just move up the threshold, say from 250K single and 500K married up to 500K and $1 million. And another angle to keep in mind is that relaxing the tax helps the wealthy more than it helps the poor. And now house flippers want to pay particular attention to what happens here. For instance, simply eliminating capital gains tax on house sales, well, that could benefit those who buy and flip homes for a profit. If policymakers want to benefit only homeowners, then they need to parse that out. Otherwise, this would be a huge boon to eliminating the capital gains tax on house flippers, a total godsend, a windfall for them. But in any case, relaxing the tax would mean that homeowners who move would therefore retain more capital to reinvest in their next property, which they can then use to outbid others and drive up home prices even more. So that's how much tax a home seller has to pay. I've covered how to avoid it and what the effects on the housing market would be. If you've owned your home for years, this is your wake-up call. Run the numbers, do the renovations, see if you have capital losses that can offset your gain perhaps. Know the rules, or the IRS will write them for you. $1 million homes will be everywhere in 7 years. Watch that here. And inflation is destroying us all worse than we think. Watch that here.